Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are in the right place. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are construed as investment or trading advice. And of course, everybody in here does know that you can do trade at your own sole discretion. All right, so tonight's topic, this is sort of a follow-up from last week where we got a lot of good feedback on detailed trade entries, taking the time to really assess the market conditions and what type of entries we want to take. I'm going to start off here with Weimer. I've got a WIME chart teed up, ready to go here. Let me get over to screen one. So just to orient everyone, if you're visiting or new, this is Pacific time, of course. I'm here in California, and the open of the market. Well, this is midnight Pacific, so this is the open of the European session. U.S. equity market open was right here, 6:30 Pacific time. We can see that overnight what happened was that we were in the midst of a little bit of a sell-off here, going into the wee hours of the morning, early into the European session. We had a little mid-band trade here, beautiful textbook box. And we get this sort of classic pattern. I'm going to just sort of quickly recap to get us over to here, and then we'll go forward from the open. So just give me a second. Stick with me here, okay? This is a classic pattern everybody's seen after you get a little box trade. Depending on the instrument, it can vary. You typically get usually some kind of pop, and then you get a little pullback into support. And then, of course, you see WYM went into a very nice protracted uptrend move. Now, I did want to point something out here in terms of entries that is important to know, and we've talked about it before. And you have to be prepared for this, because if you're not, you can many times miss good trades. And what I'm referring to specifically is this. I mean, ideally, we all want the midband box. Region, tight, clean, well-defined, right at the midband. We all love that. We all know that, okay? But what I'm talking about is this. After we got the move up on WYME, up into here, we can all see that the background turned green. Midband and all the bands are stair-stepping up. Bars are predominantly blue. We are clearly in an uptrend, so we are looking to buy pullbacks, right? Buy pullbacks. Now, I understand that we all want to see pullbacks into ideally somewhere in here to buy and get long, yes? This is where we want it to go. But my question to you is this, did it get down here? In this area right here. I'm going to show you two places where this happened, okay? We get what's called a shallow retracement. In this case, it came to here, leading up to the market open. Then we push up to some fresh swing highs right in here. And then we find a really nice consolidation patch where support was pretty clearly defined right in, more or less right in this area right here. So in the case of the open, in the case of here, we were not getting back to the midband for our traditional region box midband trade. Now, question for the team. How many of you are nervous taking trades above the midband on shallow retraces into here? Like that. How many of you are nervous taking those? Show of hands. In other words, it just hasn't pulled back deep enough for you. You're not convinced that it's ready to go back up just yet. Often I am. That's me, Roger. Okay. Hey, listen, I understand it. I understand it. What was our rule of thumb? Does anybody remember from last week on how we're going to get into these trades to prevent ourselves from getting all whack-a-moled? Anybody remember the rule? What was the rule we came up with when we're looking to box the stuff in and buy support? The 3-bar method. Anybody remember that? How does that work? We look back 3 bars. We look for support or resistance, and we look for a bounce or a roll. Roll would be short, and a bounce would be long, right? So let's look back. Each one of these swings, it wasn't until the close of this bar right here that you did get the long. I'm going to just show a couple of these real quick because I got a lot of material to show tonight. Here's one right here, right? Here's another one right here. Let's see if these worked out. That one worked out. That one worked out. And, well, depending on how you count back, it looks to me like this one right here worked out too. That was the best one of them all because that pushed up to the fresh high. This one worked out right here on that candle. That candle worked out. That candle worked out. And this candle here worked out, and you got up to a fresh high. So in here, arguably, we've had 1, 2, 3 in the pre-market, 4, 5, 6, 7 at the open of the market, and every single one of them made money using the 3-bar rule. Yes? So it's pretty solid. And the reason I'm saying that, I'm just not saying that for fun because at the open I bought this. I don't know if you remember, I was buying this. And I said support's in this area right here around 1920. Remember that number, anybody? It's trying to break out through that 30.36. I was buying that. I was buying that in there. Every time I pulled back in here, I bought it. Every one of them made money. Now, some didn't make too much money. Some you just got to scalp off, right? The other ones, this one turned in to be a decent little trade. Let's see, you're getting feedback on the three. I've been using the 3-bar rule with scalping, and it works very, very well, says Lee. Good for you, Lee. Yeah, so, I can't say it's 100%. I can say that the percentage win rate's pretty high on it, particularly if you're near a support or resistance area and you're in a trend. Here, of course, the trend was up, so we're buying support using the 3-bar rule at support, using our region boxes, using limit orders, however you want to get in, using the, you could use the line or the ray tool. They all get in about the same place, right? We know the tools. We know how to use the tools. But I would submit to you that, if you're struggling with these entries, that you go into sim for a couple of days, practice the 3-bar rule using the tools, the region box, the line or the ray, or even limit orders, and just go ahead and take them and scalp them, get out. I was getting out. Peter W., to get flat in between trades. I did. In these I scalped, and I had pretty tight stops. And the reason I do that is this. So, you're getting in and you're pulling up your stop tight. I don't know if anybody was remembering. I'd say get up, get out, put your stops in tight. No loose, no loose. Obviously, we're in a range here. We're not getting the runners yet. So you got to use your stealth tool to get in and out, pop the scalpy, and then get out of it, then look to get back in. The reason for that is this, is that each one of these pullbacks, if you're not getting out in a scalper and in ranges like this, there is a possibility that one of these could do something like this. Just crater on you. And you don't want to take something that was a scalpy good winner and turn it into a big loser and wipe out all your gains here. So, it's prudent in ranges, tight ranges like that, to go ahead and scalp it and get in and out. In this case, you got a little bit more of a runner, and then it stopped out here. Still didn't make a ton of money, but you made some. Each one was a winner. That's the bottom line. Now I'm going to advance this chart bar by bar, and this is going to be a participatory thing, so I want you to watch what's happening with the bars. And when you see a condition where you're going to take action, You don't have to say what it is. But I'm gonna pretend that we're recreating real time here, and I'm gonna go bar by bar, and you just type in A, and that means that you're going to do something. All right, you ready? Okay, here we go. 6:47 a.m. Weimar. Okay, I'll go back a little bit here. We're pulling back off that swing, right? 53, pulling back, getting some yellow bars. Type in an A when you're ready to take action. You don't have to say what it is. You don't have to detail anything. Just hit the letter A when you would take action to get ready to take a trade. You take some kind of action. Too late. If you typed A in now, you're too late. I see 1, 2, 3 of you, Michael P., Lee, John, all typed in an A when the market was sitting right here. Does anybody remember in the live room when I said Weimar is at the midband, put a box on it, and let it go either way? This is right before 7 o'clock, right here. Now, furthermore, does anybody remember what was happening to the other equities at the time we drew this region box? Does anybody remember what was happening to the other equities when we drew that box right there on Weimar? What were the other equities doing? Anybody remember? Let's go back and take a quick look. Recap, get our memories, get our Spidey memories back. Well, I can show you what the old Nazaru was doing. They were selling off big time. That's right. John, you took that short. Good. We were filled short on this bar right here. We took that short. As soon as I closed, this bar closed, I said I'm short Weimar. Anybody remember that? We took this short right in the room. This is what really happened. This is a real trade. These were real trades here. I took them. We did them in the room. I see some of you took them. Yeah, you know, Lee's saying it's important for me to try to maintain a neutral bias around the open. It's hard to do. You know, it's really hard to do, especially, you know, let me go back just for a second. And I understand that comment totally, Lee, because, you know, in all fairness to you and everyone else, if you were to recreate this region box as it was happening at the time, you could make the case for a long only because the background was green, and technically speaking, we were in an uptrend here. Background was green, bars are blue, stair stepping up. We're in an uptrend. So I can understand where some people would have said, well, you know, wouldn't this be a long only box? No shorts. But what's the rule of thumb when it comes to the equities? We can't, you know, all due respect, we can't just put our head in the sand and not pay attention to what's going on around us. What's going on around us is that at the time this happened, NASDAQ was selling off. Okay? NASDAQ had already broken. It was coming back up to kiss the midband. Anybody remember this? This is what NASDAQ was doing at the time, right? NASDAQ started selling off at 645 here. And at 655, when Weimar was getting ready to break, it came up and kissed this several times. I remember Gary and I were looking at this. It was hitting it, and then it tanked. Remember? Okay, let's take a look at the Russell. Let's take a look at the Russell at exactly that same time and see what it was doing. So what I'm saying is we have to be aware, even though you're not trading these other markets, it's okay. We have to be aware of what's going on around us. We just can't ignore equity markets that are tanking and say, well, it's not going to affect what I'm doing. Well, it probably is, and it did. Here's what the Russell did at that exact same time right here. 635, arguably the Russell broke down through support right through here. It was the first one to break. And then at 640, and then at 645, we had a textbook box right here. I remember calling this out, and I took this trade that was filled short on this bar right here. And then not only did it come to the support, but it paused here for another chance to get in. It sat there for about 3 minutes. And truth be told, I was in this. I was feeling a little bit of heat. I kept thinking, well, it could pop right back up here and stop me out. But it didn't. Now, at 6:55, where was the Russell in relationship to its position here? Well, let's take a look. Russell was right here. Where was Wyoming at 6:55? 650. Right here. So let's compare the charts. Let's put them right next to each other and see how we could have had a premonition that we were going to get a breakdown on Weimar. Stand by. Give me 1 second to get these right next to each other. So by the way, I've really advocated for everyone to simplify their charts. We've talked about just going with 1 or 2 trading charts. You know what? I'm just for simplicity's sake, let me clean this chart. This is a mess. Just give me 1 second here. There we go. That's better. Let's just clean this thing up a little bit, and let's get this box on here so we can be really clear about what we're talking about. Now, when we say to put 1 trading chart on, okay, we're talking about the chart you're going to trade, that we don't get distracted trying to trade too many charts. And when I say trade, I mean actively trade. Region boxes, orders, that sort of thing, right? Limit, targets and stops. It's a lot to juggle. But that's not to say you can't look at the other charts, or, somewhat listen. You have you can put the room on a laptop, or you can put the rooms on another screen. And like I said, we're not an ostrich here. We're not just sort of not ignoring what the other markets are doing, because sometimes they affect what we're trading. So explicitly, to be clear, what I'm saying is this, is that if the Russell and NASDAQ are selling off, and the other market like ES or YM, which might be lagging the other markets, is probably at some point going to follow it. And it did. And that's why we said at the time, let me just get these, I want to get these 3 right now. This is really important. That's why I'm taking the time to set this up. Okay, I think I got it here. Here we go. All right, all 3 are right next to each other. Yeah, Lee, it's okay if you're just trading YM and RTY. That's fine. I understand some people, really don't like NASDAQ. It's too fast for them, and that's fine. But I mean, even RTY was an early indicator that YME was going to break, right? I mean, here's 649 right here. It had already broken 650, 653, 655. It's already down here. Here's Weimar getting ready to break. Here's 653 on Weimar. It lagged it. We knew it was going to break. It had to break. It can't fight the tape forever. Those algos eventually are going to get in sync with each other. Here's 652, 653 on NASI. Look at the difference in the quantity of bars and the location of the bars. What I'm referring to is this area right here on NASDAQ. This area on the Russell. I'm just going to generally do it something like that. I'm trying to equate these time boxes to each other so we can get a relative sense of how many bars that we're actually dealing with in the same span of time. And here you're probably looking at something more, maybe like this. Right? So generally speaking, we're looking at roughly from 648 till about 658, a 10-minute swath of time. In the 10 minutes that formed here, this is what you got on NASDAQ. In the 10 minutes that formed here, this is pretty much kind of what you got. Well, no, it'd actually be more over like this, wouldn't it? Be more like that. 648 to 653. Be more like that. And then, of course, Weimar would be something like this. Why are these so radically different? Why are these markets, why is there so many bars? I don't know how many bars are in this box, probably 50 at least, maybe more. And then over here, maybe you have, I don't know, 10 or 15. And here, maybe you got 20. You know, you got maybe 15 or 20 in this box here, right? Depending on where you put it. Just trying to make it all relative. Here, maybe you have a dozen to 12, 10, 15, less than 20 probably. What's the difference here? Why aren't they all the same? Why isn't this one doing what this one's doing? Why was this background red already and it's chopping around this like this? Why had this one broke down 5 minutes after the open? It broke support, did a mid-band check, and then rolled, and when it already was breaking down by 650. 650 over here was right here. What's going on? Here's 650 right here. 650, Wyoming was still sitting up here. 650 over here, this thing is already down here. What is going on? Why are they so different? Which one do you like best? Out of all these bars, configurations, and all the volatility that you'd see on the screen right now, which one do you like the best? This, or this? Just type in an instrument. And your answer will pretty much tell you what you probably want to be trading. Now, I'm not disparaging NASDAQ. Some people might think, well, you know, you're just hating on NASI, right? I'm not hating on NASI at all. Look, you know, NASI gives a lot of big swings up and down. I know Gary actively trades it. I picked my spots on it. Yeah, what's happening here? There's a leader, right, Jim? That's where I'm going with this. If you're wondering what my point is, if you're saying get to the point is there's usually between these three, one of the three is the leader. And it's normally either NASDAQ or Russell. Remember years ago, it used to be the Russell. The Russell would lead everything. The Russell went up. Eventually, NASI and YM and everything else went up, right? Remember? Back in the old TF days, Russell would go down. These two might dawdle around. NASI might dawdle around. YM might dink around. And then eventually, they all go down. So that's what we have. We have leaders and laggards. So some of the algorithms are running a little quicker, but we have to be cognizant of what they're doing. We have to pay attention to what they're doing because it affects our trade. In this case here, it pretty much told us that the YM box wanted to go either way. Russell is sometimes a leader, yeah. NASI is too demanding for you to trade. Okay, well then you can do the Russell and YM. Definitely. There is normally a leader, and you have to we have to watch the markets to find out who's leading what. Now let's go beyond this. Does everybody see the trade entries here? Does everybody see the difference between these three equities right at the open? Everybody, any questions on this? Any questions on this? Everybody see what we're doing here? Let me advance the charts a little bit, and let's see if we can pick up a couple of other good entries for you, okay? Okay, I'm gonna do each one of these individually. Ready? I'm going to start with Weimar, and I'm going to quickly, for the next half an hour or so, I'm going to start quickly ripping through these because I want everybody to get some good trade entry memory muscle going. All right? So when you spot these patterns, they're real clear to you. And here's what we're going to do. We're going to do a series of exercises where I'm going to advance the chart. We're recreating this morning as if we're in real time. And here's what I want you to do. It's really simple. It's going to be really simple. It's a good exercise, though. When you see a trade setup, I'm going to advance Weimar, I'm going to do Russell and NASI. We're going to advance the next half an hour. And when you see trades, you type in a T. Okay? Ready? All right, I'm going to start with YM. And here we go. I'll tell you what I'm going to do. I'm going to make the Russell chart for this exercise a little bit bigger. YM chart, sorry. Each one I'll make a little bigger and I'll advance. So when you see a trade set up and you're prepared to take action, to take a trade, hit the letter T. Ready? All right, we're selling off. I'm not going to say anything. I'm just going to advance it. Good. This was a mid-band kiss. We called this in the room, remember? I distinctly remember saying, I remember these numbers, and I rarely remember them because we normally take so many trades, but I remember saying it should stay under 89.90 and roll. And what did it do right there? It kissed it perfectly. As I recall, the mid-band was actually sitting at 90. Does anybody remember that? You should remember those numbers. I said it right on the button. I said it should stay under 90. And so when I'm saying that to you, I am looking right here. I'm telling you what I'm looking at. I'm watching this right here. I'm normally watching the mid-band. So those numbers, just so you all can be on the same page with what I'm looking at, I'm looking at the mid-band. Okay, I'm looking right in here. Even when the market was doing this, and I'm managing the trade, and I'm calling out stops, and I'm calling out targets, and I'm calling out trailing stops, tight and loose, tight and loose, tight and loose. When the market was down here, was all the way at 66, what number did I call out? You remember that, John, right? Yeah, you remember that. You were in that trade. I know you were. The market was here at 66, and I was saying what? It's got to stay under 89.90. Why was I saying that? Because the mid-band was coming right here. Does everybody get that? So if you're ever in the room and you're like, what? The market's down at 66. What is he talking about, 90? That has nothing to do with here. Well, here's what's going through my head as I'm watching it. I'll just reveal it to you, okay? Here's what's going through my head. Here is what is going through my head. At some point, this sell-off, that the market participants and the algorithms will start to cover their shorts, yes? And when they cover their shorts, it's going to create the updraft, which is going to have a tendency to push it up. We don't know how high it's going to go. It could go shallow to here. It could go a little deeper to here. It could go higher into here. But generally, I use the mid-band as a good gauge for retracement. So that's why you hear things like, it should stay under 89.90, even though it's all the way down here. And sure enough, we get a retracement. And I'm not always perfect like this, but sometimes it's pretty close. And this just kissed it perfectly. On the wick of that candle, it nailed 89 and rolled perfectly. So that's why we call these numbers out in the room. This was the retracement we were waiting for. And we got it perfectly, right on the button. Okay, good. Everybody got that right. I saw all the T's come in right as it came up and kissed the mid-band. Perfect. All right, let's do another one. Ready? Okay, here we go. You type in a T when you see a trade, right? Type in a T when you see a trade. Bar by bar, I'm going to advance it. All right, here we called out a double bottom. Everybody remembers, right? I said take some coin down here, 65. It just wicked the bottom by one tick. In the room, what was I saying? What was I saying in the room? Anybody remember? Anybody trading Wyoming with me? Kissed it again, didn't it? Now, let's recap. Why did we say take profit down here? It broke the bottom by one tick. When a market comes to a support level, what do we expect to happen? Probably going to get some kind of bounce. This is where you get down here, you take profit on multiples, and you crank your stop down to get out. Comes right back here and kisses this swing again perfectly. Textbook. It was just, couldn't have been any better than that. Everybody said T right here. Perfect. That was your another chance to get in. Rolls over, goes a little bit higher. It's okay. 3-bar rule. Here, let me ask the question. Is this an entry on a 3-bar rule? Right here? Right here. These 3 bars. Is this an entry? Is this a short entry here? Yes or no? How about up here? Yep. Could have gotten short on this bar or this bar. Either one. Kissed 89, went a little bit higher, 90, went 92, wicked up, rolled, comes down, tries to check the bottom, hits it one more time, right on the button, breaks it by one tick. So in effect, what are we doing with YM here? Let's look at the bigger picture. What are we doing with YM here? Let's just recap. Let's say in the beginning when the market opened at 630, you know what? You just didn't get, you didn't buy these shallow pullbacks. You just didn't get them. That's fine. Here's 630. The market had already run up. That drives me nuts. Okay, truth be told, I'll just tell you, I hate it just drives me nuts when I come in the morning at the open and the things run up and up and up, and a lot of times we're left with this choppy, all due respect, crap. Just chopping around. Drives me crazy. You feel like you missed the move and we're left with the slop. They already had the steak and potatoes and we're left with the T-bone gnawing on the gristle. Anyway, enough about that. But what I'm trying to say is that if you miss this, if you miss this shallow pullback thing and you weren't buying here and scalping it, that's perfectly okay, because here at this, right before 7 o'clock, we got this beautiful short. Textbook one, that could have been your one and done. If you put, a couple 3-lot on there, you're filled short at 25 and you trailed your stop down to, I don't know, round number 75. That's 50 ticks. Times 5 is 250 a contract. 2-lot would have been $500. This could have been your one and done trade right here. You could have been done before 7 o'clock on a one and done, on a 50 tick drop, just like that. Just like that. Bam, done. But look, if you didn't get that, you could have taken another one here. This one scalped out about, I don't know if you got 20 ticks, probably got 15 ticks off of it. You got another one here, 15 ticks. 3 winners, all before 7:30. How many times have I shown this chart in a webinar and I show the same thing over and over again every morning on YM? Anybody? You want to venture a guess? For the past month or two on YM in the morning, showing trades just like this every single time? Is anybody taking them? Show of hands. And I'm not going to pass judgment on anybody. Just if you're trading YME and you're taking the trades I'm showing, just type in a Y. Show of hands. Okay, we got 2. We got 3. We got 4. I guess that's better than 0. So everybody else that's in here, my question is to you. Ready? Oops, misspelled it. Why not? Why aren't you taking these trades on YM? They're just clear as a bell. In terms of a market that respects swings and is somewhat of a controlled, smooth market, YM is probably the closest thing you're going to get. I don't know why anybody would not take these trades. I just don't understand it. But that's perfectly okay. Let's move on from there. For whatever reason, you're not taking them. That's cool. Still learning how to use Object Trader? Well, that's cool. Lee says, to be honest, I do as much as I can, but I get distracted by the many markets that are followed simultaneously. Are you referring to the markets that we follow simultaneously, or you do, Lee? Just to get clarity on that. Peter says, I'm watching NQ and it takes all my time. All right, so here's what I want everybody to do, because I hear this all the time. We're having a little tough love here, okay? Let's have a little tough love. Because I hear this all the time. And we got a lot of people in here tonight, and we only have 4 people trading Weimer. And you could have been done by 7:30 on 3 total winner trades. Even with 1 or 2 lot. You could have probably had $1,000 by 7:30. Look, we've talked about this before. It's really simple. So the question really comes to this, and we talk about this, and we're going to continue to talk about it because it's an important issue. And you need to ask yourself this. Everybody in here collectively who trades NASDAQ, and it requires almost or all of your focus, is it worth it? Are you making enough money trading NASDAQ? And I want to put an important term in here, consistently. Okay, don't say, well, Charles, the other day I made a couple $100. Well, and then what happened the next day? Well, I gave it back, and then some. You really got to look at this, okay? Is NASDAQ worth your time? Is it worth all of your time? Or are you giving up too much and not looking at other markets? And if your answer is, I'm not making money consistently on this, Charles, I'm just not making money consistently on it. Some days I kill it, other days I get hammered. Well, then, you got to start mixing things up, okay? You got to start looking at other things. You got to look at YM. You got to work the Russell into your box, into your mix. You got to look at crude. You got to start looking at gold. You got to start mixing it up. You can't tie your hands with one instrument, especially when it's beating the snot out of you, and you can't look at anything else. I know everybody likes NASI. The volatility is huge, but that we know it bites both ways, right? I'm just going to throw that out there. I have trouble with NASDAQ and CL and GC, and I get overwhelmed. Well, Lee, I hear that all the time too. That's a very common thing. And what we've talked about, the way around that is that two things. And for others of you who are facing similar issues, what he's saying is there's too many markets, and he's having trouble focusing. And we've talked about this before, but it's worth saying again. The reason we track 5 markets in the room is because we have people trading all over the world with us that come in there, and they trade different markets. So we have to have different markets. We just can't show one Weimer chart and have that. That's not going to suffice for everybody that comes in the room with us and that we train and work with. We have to have multiple markets. Now, that being said, if you are, let's say hypothetically, that you're just trading for tomorrow purposes, you're just looking at the Russell and NASDAQ, or no, the Russell and YME. These are the two that you're focused on. I'm just using this as an example. It could be anything, right? Okay, you're looking at YME, you're trying to take some trades, you're looking at the Russell, you're taking some trades, you're watching these markets together, and then all of a sudden you hear a NASDAQ call come in. Should you pay attention to it? Does it have any relevance to what you're doing? Or a gold call comes in. Hey, gold's popping up. There's a mid-band box on gold. Look at crude. It's coming up. It's kissing that swing. It's getting ready to roll. Get ready to short it. And you're looking at this chart, and you're looking at this chart, and gold calls are coming in, right? Crude calls are coming in. NASDAQ calls are coming in. Selective hearing. That's right, David D. I've said it before, okay? This is really important. If you want to be successful trading these markets, selective listening is what we call it. You have to tune your ears when you're in the room to the relevant markets that you're trading, right? Don't allow yourself to get distracted by gold calls. Here's the other thing that I've noticed what happens. I know it happens. I know it does. Is all of a sudden you've decided that you're going to be focused on in this example, YM and Russell. This is what you're going to trade, yes? And all of a sudden a gold call comes in. I know for a fact, and some of you listening to this recording, I know, and there's nothing wrong. I'm just going to address the issue and move on, okay? Here's what it is. I know some of you do this, and I'm going to strongly urge you not to do it anymore because it's hurting you and it's holding you back. Stand by. I'm going to show you what I'm talking about. Ready? Okay, you're watching YME, you're sort of watching YME, Russell is kind of bouncing around. Maybe you took a trade or two, maybe you made a little bit of money. A gold call comes in, all of a sudden, what are you doing? You're pulling up a gold chart. Pulling up a gold chart, and you're starting to look at it. You're starting to look at it. I know some of you do it. I know you do. But what's the problem with doing that? What's the problem with doing that? In other words, you started off your morning like this. All of a sudden, you hear what you think is a juicy gold call. I'm just using gold as an example. Could be crude, could be anything. All of a sudden, you hear a call and you want to pull this up because why? You think you're going to miss it. Fear of missing out. So you scrap together a chart real quick. What have you just done? First of all, I'm just going to state the obvious. It's too late to get the gold call. You can't just go get a chart and start looking at it if you haven't been focused on the swings and the lines and support and what direction it is and where you're getting in. You're gonna get in late. You hear the call. The call might have been here. By the time you get the chart up, the market's already up here. You missed it. But what's the double whammy of doing that? Getting distracted with chasing other markets. What's the double whammy of doing it? The first whammy is you probably already missed the trade. Okay, that's the first whammy. But what's the second whammy to your trading? Other calls are going on over here, and guess what you're doing? You're missing them. That's the second whammy. Now you come back here. There's another call on YM on a mid-band box where it sat there for the better part of 3.5 minutes, giving you a chance to put a region box on it, put limit orders in. And by the way, I want to explicitly address, yeah, you lose focus, Peter W. Of course you do. You can't jump around between these charts. It's just going to kill you. You're distracted. Look, if you made a decision that you're not trading crude oil for the day and you get two charts up like this and you hear a crude call, you have to ignore it. You just flat have to ignore it. Don't go get a chart and start chasing that market around. You're going to double whammy yourself. You're going to miss the trades you were entitled to take, and you're going to chase late markets, and that's why you're getting in late. Here was another textbook move on Weimer. It came back up here, and it just sat here. I remember calling this and saying, put your box on here and let it go either way. You're right at 730, 740, 745. 735. It sat here for like 5 minutes. You had all day to put a box on this thing. I mean, I don't know what words to say. I'm sorry, I just don't know what words to say. Furthermore, I would submit to you that if you're having trouble learning Object Trader, and some of you are, and that's perfect, I'm not going to disparage that tool. It's the best trading tool in the world. I've said this before. How do you get in without drawing a region box? Let me make sure I'm in sim here. Yeah. What do you do before I do it? Charles, look, I love Object Trader. It's the best tool I've ever seen in my life. I want to learn it. I want to use it. I want to make money with it. But I'm having trouble with the boxes. The Ray tool is a little cumbersome, so I'm struggling. Help me. What do I do? What do you do? What do you do? Here, we'll take the box off. You didn't even draw a box here. How do you trade this? Are you completely helpless? Is there no other thing you can do? When YM sits here for 5 minutes? Even though you had plenty of time to draw a box? Let's say you didn't draw the box. How are you going to get in? I mean, we have the indicators. That's, of course, why we have the mid-band and the bands, right? We have the colored bars. We have the structure to see and take trades. We have support and resistance. We have our lines. We have all these tools to help us. So, yeah, you're struggling with one of the tools. Okay, no problem. What are you going to do? Put limit orders in. I've showed that. Remember? What do you do? You take what would be the box, and you can just physically draw a box here, okay? It doesn't have to be a region box. It should be, but it doesn't have to be. And then you simply put a buy order in here, and you put a sell order in here. Bam, just like that. Just like that. Right? I mean, essentially, it's the same thing, right? It's the same thing. Now, what's the difference between Object Trader and putting limit orders in? I mean, what would be the advantages of using the region box over limit orders? Well, Object Trader does everything automated after that point, right? You know, it puts in the targets. If you're buying more, if you're buying 2 or 3 lot or more, you know, it's putting in your scalp targets, it's putting in your runner targets, It's putting in your initial stops. I mean, there's obvious advantages to using Object Trader, right? It's putting your initial stop down here. You put the trail in, it's trailing your stop up for you, hitting the targets. It's managing all that for you. With a limit order, okay, the drawback is you're going to have to do all that yourself. Because once you're filled here, 2-lot, now you got to start getting targets in. And you got to get your stops in. And then you got to trade. You got to do all that manually. So that was the whole purpose between Object Trader, was to avoid having to do this manually with limit orders. But what I'm trying to say to you is that if you're struggling to use the tool for now until you get better at it, it's perfectly acceptable to go ahead and put limit orders around a box like that. Yeah, I mean, it's that simple with a limit order. Right click, bam, make sure you got the right account teed up over here. If you want to do it in Sim, make sure you got your Sim account here. If you're doing it live, put your live account here, however, sub accounts, whatever you're using. Just make sure you got the correct setup there, right? Put your limit order in. Here you see your little box region there. Bam, just like that. Boom, right click. Bam, buy order. It's that simple. 2-lot. Then when you're filled, you take your 2-lot down here, and now this becomes your trail stop. Hits a scalpy. It's a little bit of a pain, but you could do it. Hits a scalp target. You take your trail down to 1. Take your runner, take your runner target out of the way. Trail to stop, manually. And then it takes you out. Boom, trade's done. Just like that. So you have to make some decisions. I would strongly urge everybody here to continue to work with Object Trader. Use the objects. Try to learn it in the markets if you can. Use the Sim account. Get comfortable with it, and then try to take some live trades with it. If for some reason you're having trouble getting that down, it's perfectly acceptable to use limit orders just like this to get in and out. It's a little more work. It's a lot more work, but you're still getting the trades. Okay. All right, let's come back over here. Let's do a couple more. We're almost out of time. I want to do a couple other exercises. And I know I beat the horse on the NASDAQ thing, but the important takeaway is this: is that you have to be successful long term in these markets. It really requires a lot of focus. You got to get focused. You can't be chasing markets around. If you hear a gold or a crude trade called and you're not trading that market, don't go chase it and get a chart and start chasing it around. Please, I'm begging you, don't do that. If you do it, if you choose to do it, then you got to be aware that you don't want to take the thrust moves. So just an example, if a gold call is made here and you get the chart up and it's already up here, not to chase it here, right? Don't take a market order and jump in late and then bam, you're hit with a big pullback. You have to wait for retracements. You got a little bit of one, you got a shallow one here, and then later on in the morning, you got another one right here. So that's what I'm saying. If you are still a chaser, okay, no problem. Just don't chase it in the thrust move. Wait for a pullback and then look for another entry because you probably missed this one. That's all I'm saying. All right, here's what I want to do. I want to take the Russell and I want to do a couple other quick trade things. You're going to type in a T when you see a trade. I'm going to clean this chart up and we're going to start it again right now, and you let me know. I'm going to blow this up so it's real clear what's going on with old Roosty Bird. Oh, wait a minute. Let me take these orders off. Just 1 second here. Okay, take the orders off. Get the Russell chart up here. And let me orient you again real quick. Here was the open. Let me see. I cleaned this off maybe a little too much. Sorry, but just give me 1 second here. 630 was right here. Okay, just to orient you. Open the market. It looks a little bit like Wyoming. Just to recap, we were heading up, not quite as dramatic as YM. Obviously, you had a mid-band trade here. Mid-band trade here was heading up. 633, it broke down. We got a mid-band box here. We already showed these trades, so I'm not going to go over them again. Here was the first short, and then it paused right here, and you had a second chance to get in. This is what we covered earlier. All right, so you're selling off and you're trailing your stop. Now you type in a T when you see another trade. Ready? I'm going to start advancing this chart in real time, pretending that we're looking at it at 7:01. You type in a T when you see a trade. All right? Here we go. Okay, good. There's a trade here. Remember? Remember on the Russell, we were short and we were trailing our stop, trailing our stop, trailing our stop, and it stopped us out. It never got back in here. It just went sideways. It was frustrating. It went sideways for about 7-8 minutes. Remember? Remember it was drifting around, and I used the term no man's land. Russell is floating around in no man's land. What does that mean? Well, what am I talking about? What kind of silly gibberish is that? Well, what I mean is that support is down here, and it's not going down to check it, right? Resistance is up near the mid-band, and it hasn't gone up to check it. So if you hear that in the room, one of us, Gary or myself, says it's floating around in no man's land. That's what we mean. It's got to go either way. It's got to have to get. So if you stopped out here, as I recall, I remember calling out the mid-band distinctly on this one. I said it's got to stay under 97.30. I believe, I'm trying to recall, I think I had my runner stops above here. So I stayed short through all this. Now, yeah, if you were using line 2 or stealth as a trail stop, it got you out here. So you were already out, and you're waiting for another move. Yeah, it was floating around in no man's land here. It wasn't getting back down here, and it wasn't over here. Well, we were already short, Charles. Yes. And we had the trail stop was up here. If you had stopped out and put a box on this, I don't think you got short again. I mean, depending on how you drew the box, I don't think you got short again here. I'm saying for the tight stops. Yeah, if you were using line 2 or stealth, yeah, it wicked you out right here. So with the tighter ones, of course, you're out. So everybody knows, right? We use line 6 and line 2 and or stealth for the tight stops, and the loose stops generally are around the mid-band. Okay, right? So everybody typed in a T here. Perfect. It came up and it wicked. It did the same thing that Wyoming did right here, right? Just wicked it perfectly. Kissed it again, and then rolled over. Check the bottom. Just a textbook mid-band trade short. So on the Russell, let's just say you got short. We have a very similar condition as YM. I don't know, you got short here. Let's use a round number, 41.0150, and the tighter stops got you out at I don't know, 96. What is that? 0150, 40, 41? No, 51 ticks. Call it 50 ticks. So you had 50 ticks on YM and you had 50 ticks on this drop. You know what you could have done? You could have put one lot short on Wyoming and one lot short on Russell. It would have been 250 a piece. You would have been up 500 between the two, right here. 50 ticks short on Russell, 50 ticks short on Wyoming. Came up, you had the scalp, rolled over, check the bottom. Trade number 2, winner. Good. Everybody typed in a T right here. That was correct. Yes, you were correct. This was another short kiss off the mid-band. Exactly. Charles S. Yellow bars around the mid-band is usually pretty good to draw a region box. Yes. Yeah, I mean, this is my go-to trade right here. I mean, of course, most of you know that. Everybody knows that. These kinds of trades right here, this is what I look for every single morning. Every morning on what I trade. These mid-band boxes, just like this. You know what? If you could just master that, if you could master that one trade entry, mid-band boxes, you would make money pretty consistently every morning. I mean, occasionally you're going to get a loser. It happens. Let's do one more. Anybody like that exercise? The trade, typing in the T, good stuff. Okay, good. Yeah, well, we'll keep doing it. If it's helping with your entries, I mean, that's the whole reason we do it, right? That's the reason we do it. We do it to help with the entries. You got to see those entries, right? Okay, good. Tell you what, let's do one more. Ready? You're going to type in a T when you see a trade. We're going to go bar by bar. Ready? Here we go. Okay, you're already in this short from here. Yeah, T. You're back at the mid-band. I mean, you could... Now, does anybody recall here what we did? Do we let this box go either way? Does anybody remember? This all happened pretty quickly. I can't remember. I think we did. Yeah, I think we let this box go either way. Does anybody remember why? I can tell you because I do remember this. NASDAQ had already shot up like 50 ticks, remember? That we missed? Remember we were shorting out of NASDAQ at this point? Remember? NASI was short, selling off. Bad unemployment report news. Wyoming selling off, double, triple bottoms. And then all of a sudden, remember, NASI flipped and ran up 50 ticks, just stopped out the shorts, and then just took off like a rocket. Remember? At the same time this was happening, that was happening, Russell came back, kissed the midband, and sat there just for a minute or so. And that's exactly when Wyoming did this. Had this beautiful... Weimer was the slow one. Weimer was the last one to the party. It just sat here for 5 minutes. Now look what happened to Russell. Russell just blammo. I mean, you had to get this box quick, or you had to get a limit order in here quick, because it just... And then you got a little bit of a pullback here, but it wasn't much. Some of you, if you didn't catch this, I understand. It just really just took off from here. If you didn't let that box go either way. Or if you had short only, at the time it was forming, you might have been thinking short only. If you had short only, yeah, you missed the long trade. Yeah. Yeah, it just shot up like a bird, just like NASDAQ did. So did Wyoming. All right, listen, I got to wrap. I'm going to turn off the recorder. Thanks for coming.